It's a holiday eve in Nigeria. I must tell you, Lagos is busy. Travelers are on the road. Markets are full. But we're still here. We'll do business here on Business Morning. It's 55 minutes of current and relevant business conversations. That's what we do. I'm Ini John McQuay. You're welcome to the program. We start from the global space, seeing that oil prices slipped in early trade on Thursday after a build in U.S. gasoline and diesel inventories and Saudi Arabia's cuts to its July prices for Asian crude buyers. So putting our eyes on the numbers now, we see a 21-cent cut off Brent prices, and that's 0.3% to $64.65 a barrel. WTI is also a drop of 0.5% to $62.58 a barrel. Oil prices closed around 1% lower on Wednesday after official data showed that United States gasoline and distillate stockpiles grew more than expected, and that's reflecting weaker demand in the world's top economy. Of course, we know what has been happening around the tariffs and all. The price cut by Saudi Arabia is also, which is a key producer within OPEC Plus, is also a major one. The oil-producing group that includes members of the Organization of Petroleum Exporting Countries and its allies, such as Russia, follows the OPEC Plus move over the weekend to increase output by 411,000 barrels per day for the month of July. Meanwhile, Canada prepared possible reprisals, and the European Union reported progress in trade talks as new U.S. metals tariffs triggered more disruptions in global economy and added urgency to negotiations with Washington. Back home here in Nigeria, Nigeria's manufacturing sector sustained its expansion for the 6th month as the Purchasing Managers Index rose to 52.1 points. And looking at more details of that, the PMI, according to the Central Bank's latest release, is primarily attributed to growth in activity from 3 sectors, which are agriculture, which is at 53.4, services 51.7, and industry at 51.6. Further highlight of the report shows that 20 subsectors reported growth in activities with petroleum and coal products, recording the highest increase within the month, with 16 subsectors recorded decline, with paper products reporting the highest number. The report also shows that business activities, new orders, employment, and inventories also recorded growth at 51.5, 52.5, and 50, and 51.6 accordingly. And we know that any number above 50 is growth, but we've also been told that it is a modest growth at this time. Still in, well, away from Nigeria, Fitch Ratings has downgraded the African Export-Import Banks, that's AFREXIMBANK, their long-term issuer default rating to BBB from BBB minus, a negative outlook. The Global Ratings Agency also downgraded the bank's short-term IDR to F3 from F2, and the long-term ratings on its global medium-term note program and debt issuance to BBB minus from BBB. In a statement, Fitch says that the downgrade reflects the downward revision of its solvency assessment from A minus to BBB plus, reflecting the high credit risks previously moderate and weak risk management policies that was previously moderate. The Minister of Foreign Affairs, Yusuf Tugar, is in meeting or met with the private sector leaders yesterday in Lagos to discuss the West Africa Economic Summit that's scheduled for June 20 and 21 in Abuja. In attendance, chief executive officers of corporates from Lagos and countries like the Gambia were also represented, as well as officials of the Economic Community of West African States. The minister believes that with a potential market of 400 million in the region, the summit will offer the much-needed platform to initiate business deals and foster closer working relationships.
The empirical data presents a sobering reality. Intra-African trade remains limited, constituting approximately 15% of the continent's total trade volume. Within the West African sub-region, This figure is even more modest, fluctuating between 12 and 13%. When juxtaposed with the robust intra-regional trade levels observed in Asia, around 60%, and Europe approaching 70% by some accounts, the comparative deficit is striking. This disparity underscores a critical insight. The constraint of Africa's, and more specifically West Africa's, economic integration is not a function of lacking potential, but rather of deficits in coordination, cross-border infrastructure, and sustained political commitment.
And just before we go to the commodities space now, to talk about especially the Naira, let's give you a bit more details about the Central Bank PMI, Purchasing Managers Index, that we talked about earlier with more details. Now, we did see, of course, that for the composite, it's positive at 52.1. But when you look at the sectors, for instance, agriculture, we did see the movement there. If we could have that slide, that would be really helpful at this time. So we have for agriculture, we have for services, and we have for industry. So agriculture, a major pusher at 53.4. That, of course, is heartwarming at this time. And then we see for services at 51.7 and industry at 51.6. So, I mean, this talks a whole lot about activities going on and perhaps connected to the reforms of the federal government, but we'll get a comment or two on that in the course of the program. Just wanted you to see some of those sectors that are majorly driving. We also see new orders also increased, 51.5. We see employment also 52.5. Inventories also 51. And then, of course, we see growth at 51.6 for inventories. I wonder if to say Nigeria's business environment is becoming more friendly, can we say that? Well, we'll get comments from our guests, on the show. And I think the first person we're going to try to get her own perspective, or FDC, Financial Derivatives Company perspective on this, is Halima. Halima Adedinro is here with us for the second time this week. Halima, good morning and welcome to the program.
Good morning and thank you for having me.
So we see growth index from the CBN PMI. Are we good? Is the country okay?
Okay, so for the PMI, I would say we are getting there, let me put it that way. And we'll see that there are some sectors that are really thriving in terms of output, in terms of employment, are really doing well, which is a positive one for our GDP and the outlook for the economy in general. But there's still issue of logistics, issue of infrastructure that is going to be like a way down on some of the sectors in Nigeria. So going forward, I think the picture is becoming clearer and more better than what it used to be, but there are still some things that needs to be put in place in order for us to really have a surge and a good output and performance, especially in the year.
So, and we say agriculture seems to be the one leading.
Exactly.
Over 53. And we know we always talk about commodity. This is planting season. Things are expensive, at least at this time. But we say agriculture seems to be good.
Agriculture, if we take cocoa, for instance, I think we did about 24% higher than what we did in Q4. So Q1 of 2025 was very good for cocoa, and I think the government too has increased the output, the projection for output to about 500,000 metric tons, which is going to help the non-oil receipt for Nigeria. So I think agriculture is getting the larger share of the contribution to the economy, And so I think it's a good one
And
for...
services, I think after the tariff hike, telecommunication is doing well now, I guess.
Yeah, they are doing well because the increase in the tariff, one, has increased has reduced their cost. Let me put it that way. The cost that they used to be the one to shoulder. So some is now being passed to the household or the customers, which is a very good one for their profit outlook and their revenue. It's not good. It's not good for us. It's not good for us. The sectors are always pushing to households and individuals, but unfortunately we don't have where to push it to. We either reduce our expenditure.
Let's push it to our employers.
But unfortunately too, that has not been the issue. So either we reduce what we used to consume, or we stay out of the consumption entirely. So that has been the case for consumers generally in Nigeria. But I think it's going to be a better picture, especially for Q2. Though Q1 report isn't out yet, we expect it to be out as soon as the authority.
So on Tuesday, when we were here, we talked about how the naira appreciated, but the reverse is the case today.
Now, you know, I said earlier that the appreciation we saw wasn't because of
the value of the naira, it's also depreciation of the value of the dollar.
Yeah, because so many things are still lingering, like our remittances, which could be hit by the new tariff.
The one
new
on
tax.
The steel?
No, the one on the inflows, remittance inflows from African countries. So there is a tax, about 5%, that the U.S. government is placing on that. So that could be bad for us as a country, because remittance is meant to help in supporting our currency. So that's not a good one for Nigeria. And apart from that, if we look at the non-oil receipts too, is just beefing up, is not yet there. So, and also for oil, I think we had a good one. Our output was about 1.48 million per barrel, which was an increase compared to what we had in, I think in March, which was 1.4.
Yes.
And so it's closer to our OPEC quota. So I think...
But very low compared to our target.
Our target. Then, coupled with the fact that the oil price in the global market is trending downwards. Yes, so though we have an increased output, but the price at which it will be exchanged or being sold or converted, it has dropped. So it might not really have an upsurge as expected. It could be just marginal increase.
So what's happening to our domestic commodities now? The festival is here. The roads are very busy. It took you a longer time to get here today.
You don't want to know that.
But I mean, Nigerians will still eat and celebrate and take ram.
That's for sure. Also, for the commodities, we are seeing a mixed direction. But unfortunately for onion is really driving up seriously, and that is because of the flood in Kubwa. Kubwa happens to be the major hub of oil and onion production and trading. And so they are experiencing flood currently, which has led to a stall of trucks that's meant to bring in food. And you know, it's just like an interchange between the northern part and the southern part. So we are going to see a surge in food prices, especially agricultural food prices, because of this flood. That is number one. And also artificial increase, because you know demand has increased. So for now, those are the two major things. The flood and the festive period is going to have an upward drive on prices for commodities.
Yeah, well, Nigeria. I mean, at least by Tuesday or so, the festivities should be over. Can we please
but the effect of the flood will still be there.
Still be there, unfortunately.
Yes, so it might take a while.
Okay. All right, Halima, thank you so much, and we wish you too a happy holiday. I know you'll be at work tomorrow.
Definitely.
Yeah, that's not fair. Thank you so much, Halima, analyst in Financial Derivatives Company.
Thank you for having me.
All right, now the federal government has taken its Skill to Wealth program. They've brought it to Lagos. It's S2W. It was launched under President Bola Tinubu's Renewed Hope agenda and is set to empower youth and vulnerable populations across the geopolitical zones of the country by providing vocational skills training and business support through the Ministry of Humanitarian Affairs. The Minister of State for that ministry, the Ministry of Humanitarian Affairs, Dr. Yusuf Tanko Sununu, he was in Lagos to meet with some beneficiaries and potential beneficiaries. He says the program is intentionally tailored to suit the social needs in the country.
I said we have government enterprises. We designed a module. Rather than saying that we are going to train individuals for 2-3 days, we thought that cannot give us the necessary knowledge, skill that is needed for the program. And therefore, we move it to ensure that we have a 3 weeks program. And in our own plan as ministry, this is a pilot study. And that's why we made selections from different states. And we thought that the best way we can get the best information and knowledge that we require is to bring you together. This is not only giving you skill, it also promotes social interaction among yourself, with people from different states becoming now friends and staying together, understanding individual culture, religious, and what have you. That is also the same thing. The concept we designed, the automobile, and also the agriculture. And in doing that, we thought it's better it should be residential, where we can have your necessary attention and time. And I must say that from what we have, you have dedicated and applied yourself to the program and training.
All right, now let's get to another conversation. Right now we have the consultant and Chief Executive Officer of Flame Academy and Consultant Limited, Mr. Oji Odemezue, joining us in the studio. Mr. Odemezue, we have a lot of things to discuss with you today. Good morning and welcome to the program.
Thank you for inviting me. It's always my pleasure.
Great. So I hope you have looked at the CBN PMI. What are your thoughts? We saw agriculture 53, we saw services, I think 51, and then we saw industry or vocation also looking good. At least we saw upward trend for most of our numbers, even though we have been warned that it's a moderate.
On the average level, the PMI dropped a little from 54.2 to 52.7 or so, which is not quite relevant, but it just reflects the fact that the global economy is still not very stable, with the tariff game still going on and hopefully being gradually resolved. We're hoping that the big players in that game, the US and China, and of course the EU zone, will begin to taper their temper, and let's begin to have peace in the global economic activities.
But I thought we had the impression that the tariff, the global trade war, has almost little impact on our economy.
No economy exists, on its own. And in Nigeria, where we know that a lot of things depend on importation, you find that, it's still a factor, all right? And of course, it affects our own domestic consumption. But when you look at the PMI index, it factors in all of those. The stability of the global market, the global business environment, the local consumer capacity and so on, and of course, ability of businesses being able to decide on what to invest in, what to purchase, and to carry out the activities. Basically, business is all about purchasing assets and raw materials to enable them to operate, and also being able to finance these activities. So once there is some uncertainty in the market, these things are affected, but the impact is not that much. We've seen a slight drop, even though some sectors, like I mentioned, have seen some uptick in purchasing activities. But generally, it's neither here nor there. It's not doing so well, and it's not doing badly all the same. Looking at the trend, beginning of the year, you find that it's been consistently going up gradually, just dropping a bit now, and we hope that by June, as we approach, H2, that's second half of the year, that because companies will begin to pursue their targets aggressively, and we may see more activity, of course, hoping that the tariff war will also have ended. I think in 90 days, we're coming towards the end of it, and
Yeah, but
be
that's
hopeful.
just the pause. It looks like the war is just starting because President Trump just talked about a new steel and aluminium
Oh yeah, trying to
and all
bring
of that.
investors back to US
Yes.
and all right. So well,
But anyway, it does seem like the tariff will now affect our domestic stock market
we're not
because
so.
in the month of May, we hit a new high. We crossed the 111,000 level.
The
The
ASI,
market cap
all
crossed
share
to
index, market cap,
70.
yeah.
The benchmark gained about 5.62% in the month. And we saw a lot of sectors, consumer goods especially, leading.
Yeah, the outlook for Nigeria is actually positive, and we hope that government, will leverage on this to support, the business environment and encourage more investment, inflow of investment, both foreign direct investment and domestic investment, so that we can see this economy go back to our growth level of above 6% GDP growth. We can achieve it. This economy can actually achieve double-digit GDP growth. So
in 2025?
No, I'm just saying, in the medium to near future, we have the capacity to do that. But we need leadership, both in the private sector and public sector, to enable us create the enabling environment to make this happen. We need to, ramp up a lot of infrastructural concerns, particularly energy. Energy is still a big concern. Nigeria at this stage and age cannot be grappling with 4,000 or 5,000 kilowatts or megawatts of electricity. We need to change that narrative. Go to Cameroon, go to Ghana, go to other African countries. You feel like you're in a developed economy. If you consider only electricity, you don't see NEPA off, NEPA in. We still talk about NEPA by the way. The generating level is still low, distribution is low, and the way it's now being shared, band A, B, C, D. We don't need that if we can supply this to everyone in the country. So that's a singular, most important factor to ramping up our economic activity. You see the PMI jump up quickly. Of course, if we also deal with security at the same time, because these are things that slow down activity. If there's terrorism and low, threat to the life of the farmers, the activity will also slow down. Purchasing capability will also slow down, and these things impact PMI. Imagine we are gradually even seeing some growth in PMI right now. Imagine if everybody is so safe to move around, not just to go to their farm, but also carry farm produce around the country. Because that's a major issue here, being able to save them or put in silos and store them and be able to do other activities. So there is hope for this economy, but we need to start or keep doing the right thing to ramp up this activity.
I'm talking about the market. Yesterday we did have an impressive turnout by O&O. They announced strong full-year performance. They posted a 44% revenue growth to 4.1 trillion from 2.9 trillion. Profit after tax jumped. And then we were hearing a lot of news about O&O recently.
Yeah, yesterday.
The AFREXIMBANK.
They led the list of the top gainers.
Yeah, they made
In fact,
the market
they gained
yesterday.
the highest band, 10%. Because the market cannot allow you to go beyond 10% in a day. So hopefully that trend may continue today. O&O is a story of evolution. A new evolution in the Nigerian oil and gas sector. They are now not just leading the trading aspect, that's the downstream sector. They have made a very gigantic move towards becoming a leader in the upstream sector. Of course, we've discussed that here before, the acquisition of NAOC, Nigerian Agip Oil Company, that they concluded last year, a deal that was almost $1 billion. So for them, this is a time of sowing. They say that there's harvest time and there's sowing time. For O&O, this is a time of sowing seed. You can find that they're trying to gather all the capital they can to ramp up the use of the assets. You can't have assets, worth over 6 trillion and not be able to fund them. You can have big machines, big production plants, loading bay, kilometers of pipeline. You have to feed them with capacity. You have to feed them with, input to give you the highest return. So this is the time they are investing. In fact, investors, if they can see the future, this is where to position with O&O, and the future is so great for them because, with that acquisition, now you mentioned the AFREXIMBANK loan upgrade. That's a loan that was about $400 or $500 million paid down by them, over the year to $100 million, and then increased again to almost $400 million, showing you that AFREXIMBANK can see a lot of future and prospects O&O. So I'm hoping too that Nigerian banks, commercial banks, investment banks, that's what do you call them again, merchant banks, and other lending institutions can see the opportunity here and come in. It's no more an oil and gas company belonging to the international board as IOC is now an, like say, LOC. That is to upstream activity, and they are also building that reputation as Africa's foremost energy solution company in the upstream sector.
So, Mr.
With
Demezwe,
that,
I mean, a lot of people watching here perhaps are not investors.
All right.
And also they'll be asking, so what's in it for me as
a
a
whole
Nigerian?
lot in it for them. Last year they gave script issues of almost 120 billion naira worth. So that's a way of giving cash to investors, even though that pushed their prices down because people wanted to take profit. But a future-looking investor should hold those stocks. At 51
I'm
naira
talking
yesterday,
about energy security and all of that, since they're in the oil and gas
they are
sector.
dealing with all of that. It's a concern in Nigeria everywhere, but you can see in the past 1 year plus there was stability. The River State brouhaha would have caused an uprising, but miraculously, that didn't happen. So one those concern is, because they're also local, they know the environment. I've said it here before. So they know the environment, they know how to manage their assets all over the creeks and all the deep sea and the shallow water, investment they have. From Tebidaba to Brass and all of them, they monitor them regularly. And generally speaking, being our own people, we can talk to our people to, calm the security issues down. And the trading aspect also dealing with that. So if you look at the growth they have seen, both in their revenue, moving, as high as 4 trillion, total assets 6 trillion. And then if you look at now the details of their production, crude oil, because they're moving gradually from being a trading-focused oil company now to crude oil production focused. At an average of 6,000 to 7,000 barrels of oil per day, now moving towards 100,000 in the next 4 to 5 years. From their own prediction, 2029, you find that the amount of revenue, we can't be talking about 4 trillion, we're talking about tens of trillions in revenue. And for an investor looking at the future, if you take a position right now, I'm talking to myself too, it's time to invest in there and then calm down.
Other players?
Just be coming down, look at the future.
Mr. Demezwe, let's talk about other players also in the oil and gas sector. We see Aradel also, but I don't know. I don't think they didn't move that much last month.
What moves a market, Aradel, Seplat, and the rest of them, is activity. Every movement you see in the market is based on the news you are seeing in that company. So maybe they're still coming up with their own acquisitions and processes. I'm sure that those ones will also move when we see the step they have taken, to innovate and they take over some of the assets. Oando is only very much in the news now because they have concluded their own acquisition. And beyond concluding it, they have now, in that result you saw for last year, it delayed a little because they were trying to obey the IFRS system to integrate the acquisition. Even though the acquisition of NAOC has just played a little part in that result. By now, by 2025, when they have a full impact and more production going on, resolving their trading issues, you see that there is future for an investor in Oando. I believe that if banks can support them as they are trying to ramp up capital to fully utilize the assets they acquired, and then maybe banks support them with their own loans, you see that this is time to position. When it looks a bit risky because they're just starting introduction into that upstream business. Business cycle start with introduction, then growth. So people who come in now are going to position for the growth and will most likely see in the near future. And for me, as an investor, I'm also looking seriously on that stuff. Not to buy and speculate, but to buy and keep and watch them grow. They are just coming out of that innovative process that they've taken. And once they apply good management, strategic management, and apply efficiency, not like in a public sector business, once they apply efficiency, there is no way Oando can go except up.
Mr. Demezwe, I mean, this is not a channel
This
television.
is my view.
This is Mr. Demezwe's view.
As an analyst,
talking about this.
Yeah.
Exactly. So let's look at
once
the
the company applies efficiency, because the assets, I bought to those assets. I did my youth service in Ajip far back in 1997.
Also, you're sentimentally attached, no wonder. Let's talk about the consumer goods. They did so well last month. What were the drivers and what can we expect this month?
Consumer
goods sector, yes.
Okay, right. The fast moving consumer goods sector.
Nestle has already started surging even this month.
Yeah, it's a sector that depends on how healthy the economy is. We all consume their products, whether it's detergents or maybe what do you call them again? Creams and all of those things that we use, food items,
edibles.
Edibles and so on. They are in daily consumption. So once people are coming a bit out of poverty and begin to do better, employment is ramping up, jobs are being created, people consume. So somehow we expect that the economy will start getting better. We have stayed in this low, fragile growth for a long time. Nigeria has the capacity to start booming economically, actually. So once that is done, you see the fast-moving consumer goods are going to be, they're always a good deal. All right, so I expect that it's going to get better, with time. And of course, schools are on. Usually when schools are about to, open, it will also ramp up activity. Children are buying all kinds of things, biscuits and all of that. So it's always a good, their sales are not seasonal, by the way. It's almost, always impressive all year round. So it's a good sector, and I expect that they should be able to ramp up the activities.
Okay, what's your expectation for the market this month? We hit new high, we've sustained it, even gone beyond. I mean, we did 111 last month.
Yeah, all share index. Nigerian stock exchange, stock market or Nigerian Exchange Limited is a very well-run platform, very transparent. And once people are able to invest and see the benefit, they stay in there. So I expect that the market will continue to, grow. Albeit maybe not very fast, but gradually it's growing, and I expect that growth will be sustained. Nigeria is a big market, even though we're struggling with our position in Africa and the GDP size, but it's always a place to invest in. There's a whole lot to still get out of here. Foreign investors are still coming in, though not as much as we want them to come because of security concerns. So I still plead with the government to clear those security concerns. Agriculture, investment in local communities and so on needs to be ramped up. Kidnapping should be dealt with. These, what we call herdsmen concerns should be dealt with, even though I think they are coming down gradually. But it should be held down properly. So this country will get the benefit of, the renewed hope agenda that we have. So truly, this economy has no reason to be struggling with growth. We have all it takes.
And we need more companies on the NGX.
We need more companies to come in.
Yes,
and to be quoted, of course.
Yes, to be quoted on the NGX.
There's a listing requirement which some of them should be able to meet. But they're still trying to do big boy or stick to their own foreign market. But this is a market that any good company should come in to raise equity, and of course to be able to share goodness and then raise the kind of capital they need to keep the activities high. To be committed to the economy. You don't just come in, do your own thing without being in the market.
Make money from the economy.
Our market can be much deeper as it is now.
Yes.
And the deeper the market cap is, the more investors can come into it. No major foreign investor wants to go into a shallow market.
Yeah, and I think JP Morgan says, for Nigeria and most emerging economies, our hope should be in our debt market.
The debt market, bond market.
Yes.
And of course, the FMDQ, I must praise them. They are doing so well too. Many companies are able to raise, funds through the market, commercial papers, and bank acceptances, and such other instruments. So, it's more like trying to compete with even government, because government trying to handle our inflation concerns at tightening rates, people tend to move their money into the money market. But with these avenues to issue commercial, even banks are beginning now to raise commercial papers. Hopefully, maybe to manage the cost of funds due to high CRR and other regulatory requirements like equity ratio and so on. So Nigerian market is actually bubbling, it's getting up there. Bond markets are growing, corporate bonds and treasury bonds and so on. So the only way for Nigeria to go is up there. Can we sustain, the factors that make this market grow? Particularly, like I said, security and of course, energy cost, so that Nigerian businesses can grow. You can't be borrowing money at almost 40% right now and be running your own energy production as a company. You have to produce your energy to run your factory. Yeah. For hotels, for hospitals, for manufacturers, it's crazy, the cost. And they are now competing only in a slow manner with their foreign counterpart. Any item that's brought in from China here should not be less costly, should not be cheaper than Nigerian product. But today, it's difficult to now say, because local manufacturers are having it very tough. The other day, I listened to the chairman of the lady, who is the chairperson of the Lagos Chamber of Commerce, complaining about how the last MPC did not do anything about CRR, which is very high. So how much they get loans at? Almost 40%. You now factor in your cost of production and so on, energy costs and so on, you find that you are struggling to make sales. Ideally, locally produced items are meant to be much cheaper. So when you import something with all the tariffs, the local producer will sell first before you.
Yeah,
help you to create employment here. Yeah. But the more we import unemployment. You are creating jobs for them in China, US, everywhere else, while people are here dying of hunger, not getting a good job to show for the school that they attended.
All right, Mr. Demizwe, thank you so much for always bringing in that passion into conversations. Mr. Ojide Mezue is the Chief Executive Officer of Flame Academy and Consulting Limited.
Always my pleasure.
Thank you for your time.
Do have a great day.
You too.
All right, thank you.
All right, let's take a break. When we come back, another conversation way to uniting the African financial operations and markets. We're taking it up from here. That's after the break. Please stay with us. Welcome back. It's still Business Morning right here on Channels Television. Now, let's talk about Nigeria's financial markets, talking about how to expand or deepen Africa's debt market and, you know, the financial connections that we need on the continent in order to maximize what we have. And I'm going to have this conversation with an individual who was in Abidjan with me, Ejikeme Okoli, the Director of Africa Operations at United Capital Group. Good to have you on the program. I think I saw you at the airport then when we had the delay in flights and all of that. But thank God we are back home. We went through all of that. Good to have you on the program, Mr. Okoli. Good morning.
Good morning. It's great to be on the show.
Yeah, I know, right? And your experience at the AFDB meetings, how would you describe it? All the conversations and all of that. I personally get frustrated after having all those great ideas and conversations, and then we come back and continue the norm. What's your experience?
The FDB meetings were excellent. I provided room for Africans, especially those in the financial services sector, to have the right conversations on issues plaguing the continent, how we can mobilize more capital, especially patient long-term capital, to solve developmental issues for Africa. These conversations are rife. They will never be enough because Africa is in dire need of solutions that are homegrown. So financial services players and indeed all stakeholders, including policymakers and the broad spectrum of players that shape the financial services sector in Africa, to come together and find long-term, long-lasting, sustainable solutions that at least will move the needle in terms of solving developmental issues. And it also provided room for a change of guard at the helm of the AFDB leadership. So I believe it's interesting times ahead, because with new leadership comes a new approach to solving developmental issues. So let's give full support to Mr. Sidi and hope that it's good times ahead.
Yeah, and I guess it's people like you, United Capital, that will make whatever plan he has work. And that's why, talking about connecting the continent, I think you did start off expand into Côte d'Ivoire. You used that opportunity.
Yes, excellent. Our expansion into Côte d'Ivoire couldn't be come at a better time, because now we are seeing that Africa is in dire need of players who are able to connect the continent in ways that gaps that erstwhile used to exist are now are bridged. For us, our foray into Côte d'Ivoire this time is part of our broader Pan-African strategy. We've always been Pan-African in our approach to business, especially on the capital raising side, helping especially corporate players connect with financiers on different parts of the continent. But we've decided to move beyond that, to become less transactional and more collaborative, more developmental in the markets that we operate, by deploying long-term direct capital that builds businesses, builds communities, provides solutions to local financial issues, drives financial inclusion, and of course creates jobs, which are all elements of economic development and transformation, such that the communities where we operate, we know we are also creating an impact, while at the same time addressing issues that deal with access to finance, capital, and growth in wealth creation for the populace that we serve.
Sounds interesting. I mean, we were both part of those conversations. How Africa should be more independent and not depend on, foreign aids for our development, social needs and all of that. So where does this fit in as you make this expansion? Where does it fit into that, the crux of the conversation of Africa becoming independent?
Yeah, Africa's journey to independence will be a slow, long, patient journey. And I'm glad that we live in times where even we have taken that bold step to even deploy our own capital, our own homegrown resources to invest in markets that we believe in. Just like you said, Africa needs its own solutions, Africa needs its own capital. Africa needs to bring in its entire population, its domestic output into the financial system, with over $2 trillion in terms of GDP and a population, that also is almost about $1 trillion across the continent. So the wealth of resources available at our disposal can't be overemphasized. But we need to start thinking long term to find solutions to our homegrown issues. Yes, the issues around aid, we should depend less on aid. However, we can depend on investment. So we should stop seeing foreign support as aid, which is in form of grants that will never be repaid. Instead, we should seek foreign investment, which will come in, the capital that stimulates job creation, that stimulates economic output in ways that are progressive, in ways that are sustainable, in ways that are quantifiably show incremental growth across key indices that reflect growth of key economies. We are doing that with our Pan-African expansion. Yes, we might be one institution out of many, but the good thing is that the Nigerian financial sector, just like our music and entertainment, it's becoming something we can export proudly. Today, all over the world, Nigerian music, Nigerian entertainment, it's something to reckon with. Just the same way financial services on the banking side has been hugely successful, on the continent. We have banks like UBA taking charge, playing in 20 different African countries, present on 4 continents. That's also bridging access to finance. We are the first Nigerian capital market operator to obtain a foreign license outside Nigeria in Cote d'Ivoire in the West African Economic and Monetary Union. So we are also taking that step to show that we must start to see Africa as a collective, though we may differ by political boundaries, by geographical boundaries, by currency. But when we start to find the solutions that work, connecting capital from one end of the continent to solve needs for financing, needs for wealth creation on other ends of the continent, other players will take cue. Then Africa becomes more self-sustaining, even in terms of what the Africa Continental Free Trade Agreement was supposed to achieve in terms of regional integration, where African countries, African players get involved in trade amongst themselves with less dependence on should I say, more advanced economies that will result in currency volatility. Now, when more African players become trade partners, the issues around currency become less of an issue, less of a hassle, and we're playing in the regional bloc. The beauty about our expansion into the West African Economic and Monetary Union with Cote d'Ivoire as the economic nerve center is that with a single license, we are able to provide services across 8 different countries, serving 147 million people with a GDP that's growing higher than 6% in the last 5 to 10 years, with inflation levels as low as 2.5%. So all the elements that show that we can plan sustainably into the future are the reasons why we decided to take that bold step to say we are deploying patient capital, long-term capital, investing in markets where we hope to play for the foreseeable future, for very long term. And we're also creating jobs locally. 100% of all the employees in our new subsidiary located in Ivory Coast are all Ivorians. The board members are composed of 50% of those in the Wema region and 50% from Nigeria. So there you're going to see skills transfer. We will learn from each other. We will see what dynamics exist, on both sides of the continent. And as we continue to expand further, we will develop the capabilities, for playing in other African markets. Nigeria has one of the most successful, most stable and robust financial systems in Africa. Kudos to the central bank, to the Securities and Exchange Commission, and indeed all regulators that have ensured that despite all the volatilities in the global economy, Nigerian financial system has stayed strong, for over a decade. So those are the expertise we are, should I say, exporting, to African economies such that we are able to create solutions that have lasting impact. In certain economies where African economies as well have gone through a, should I say, financial system crisis. Ghana, for example, in recent times, before the onset of its new administration, most of the financial institutions that survived those crises were Nigerian banks. So it speaks to our adherence to strong risk management practices, strong controls. So those are things that we should be proud of as Nigerians, that we can take, into other African economies, knowing that we have what it takes to succeed.
Yeah.
And when other countries and players take a cue, it should be good times ahead for the continent.
Yeah, but it does seem like we still have a lot of convincing to do to get more players in the capital or the debt market. So even you need Ivorians, for instance, to be part and invest, in your business, in your asset management. Even back here in Nigeria, my last guest, we're just talking about how to get more listings on the NGX. So while we're calling for the foreign investors, it does seem like even locally, we need to do more convincing to get investors on board.
Absolutely, and it's something that won't happen. It's not a quick fix. It's going to take time. It's going to take tangible outcomes to also help in that convincing story. So even the players who are listed, for example, are they performing well? What's the regulatory framework like? What's the regulatory environment like? Other players who are not listed will be looking at the pros and cons. But having more entities listed on an exchange, deepens the capital market. If you look at advanced economies, the financial system is somewhat ineffective without a robust capital market. If you want to raise long-term financing today, not many financial institutions, in terms of banks, will be able to deploy long-term capital. So when you have an alternative where you can issue debt securities, across several maturities, you're also creating different alternatives for existing players, be they governments, be they businesses, small corporates, large corporates. So it's going to take a while, but Nigeria has shown, at least in recent times, that we have a robust capital market that many African countries can take a cue from. We're in Ethiopia about 2 weeks ago, participating in the Ethiopia Finance Forum at the instance of the National Bank of Ethiopia. The Nigerian exchange is a board advisor to the Ethiopia Stock Exchange because they've seen how well we have done in terms of having the right regulation, having a robust stock exchange that can compete with, any country in the world, and they're taking a cue from us. So yes, while there has to be a lot of convincing, we must also look back and be happy with how far we've come, know where the gaps are, and that gives the encouragement to take on the future. But the future isn't a quick fix, and there will definitely need to be more players. Well, the key game changer is to have the firms who are doing it today to be the role models for those that will take on this journey tomorrow. And we are proud to be playing our part at this time.
Yeah, I knew you would end with that. I mean, a role model, and you are the role model. But congratulations on your expansion, Director of Africa Operations, United Capital Group, Mr. Ejikeme Okoli. All right, well, we see Nigeria making, well, the continent, the country proud, showing how to do, being a big brother. It was at that meeting, the AFDB meeting, we had that replenishment fund where Nigeria, once again, $500 million. And so people say, what does Nigeria have to do that when we have needs at home? Well, I guess Nigeria is also a big brother, so we have to play all of that. And there you see a private sector also taking the message to Cote d'Ivoire on the sideline of the AFDB meetings. Congratulations to them. Now, just before we go, let's see what's happening in the global space. We start from the UK, where there's the news now that UK April's inflation is higher, or was higher, due to an error in transport data. I thought errors were only in Nigeria. Well, Britain's statistics officer said that April's inflation number was 0.1% point higher than it should have been, and that's because of an error in data provided by the Department for Transport. The Office for National Statistics published a statement on Thursday saying that the incorrect data overstated the number of vehicles subject to excise duty, which is a tax, therefore pushing up the headline numbers for both consumer price inflation and the retail prices index up by 0.1 percentage point in April. Now let's move to the US, where Donald Trump, president there, has imposed a sweeping new travel ban in a presidential proclamation issued on Wednesday evening, barring entry to the United States for all nationals of a dozen countries and restricting entries from an additional 7 nations. And it's also connected. There's another one connected to Harvard. He said Harvard, as a school, has failed to implement discipline on campus and fostering a dramatic rise in crime. So he is also restricting visas given to foreign students who want to go to Harvard. So President Trump, I know the issue with Harvard has headed to the court, but there's a new twist to it. We go to Germany, where the factory orders unexpectedly rose in April, suggesting that the country's manufacturing sector sustained its recovery, and this is according to official data published by the Federal Statistics Office. Over the month, contracts for goods made in Germany ticked up 0.6% in April after rebounding by a revised 3.4% in March, beating estimates of -1%. Germany's industrial orders rose 4.8% year-on-year in April, compared with the previous revised growth of 3.7%. And from there to Sweden, where the consumer price inflation eased unexpectedly in May to the lowest level in 4.5 years. Flash data from the Statistics Sweden shows this. The consumer price index, that's the CPI, rose 0.2% year-on-year in May, slightly lower than the 0.3% increase in April. Meanwhile, economists had expected inflation to rise to 0.4%. Further, this was the lowest inflation rate since November 2020. And in South Korea, Asia-Pacific markets traded mixed today after private sector hiring in the U.S. hit its lowest level in over 2 years. And this has raised concern that trade policy uncertainty could be weighing on the world's largest economy. A report from payrolls processing firm ADP showed that payrolls rose only, that's less than the downward revised 60,000. In South Korea, markets extended gains from previous sessions, with the benchmark Kospi advancing 1.49% to close at 2,812. We'll give you more market numbers at 1 p.m. Anita will be here to give you those market numbers, take you around the world of market during Business Incorporated. And of course, you have 55 minutes of updates on the economy and the market. Well, that's all on Business Morning. Thank you so much for being a part of this 55 minutes journey. We do appreciate your time. We'll do it again tomorrow. I'm Ini John Mekwa. Wish you a great day ahead.